Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing how to make money in crypto using Fibonacci retracements, part 1 of 2. The Fibonacci retracement level tool is one of the most popular and most effective tools in crypto trading and trading in general. This tool is associated with helping traders determine the key levels to place buy and sell orders. Traders who properly know how to utilize this tool can determine crucial levels of support and resistance with ease. However, in order to fully understand how and why this tool works, we have to go over the Fib retracement tool and how it's been created. Leonardo Fibonacci, widely known as Fibonacci, was an Italian mathematician born in 1170. Besides being a brilliant mathematician, Leonardo was also an avid traveler. While traveling, he discovered a Hindu-Arabic numerical system that he explored. He saw that the system had some advantages over the current European system at the same time. Fibonacci published his own book called Liber Abazi. The book included examples of how to use these calculations in everyday uses, such as bookkeeping, weighing and measuring conversions, and human interest calculations, among other things. An interesting proposal within Fibonacci's book was based on an observation of how population of rabbits grow in ideal conditions. The solution to the rabbit problem was found within mathematical sequence. We now know this as Fibonacci numbers. What's even more strange is that this was not the first time that the sequence of numbers was recorded. In fact, there were many more. The ratio of numbers, which we now know today as the golden ratio, was discovered by a Greek architect called Phidias between the years of 500 BC and 432 BC. So why are these levels so important in trading? The history and the research of many people showed that the Fibonacci sequence is found all over the geometry of nature. This sequence can be found in things like animal skin, DNA structure, and even spirals within a seashell. Most financial markets, and the cryptocurrency market is no exception, will reveal this golden ratio on its time and price periods, where a retracement of 61.8% is typically found after a 100% gain or loss. In conclusion, to sum it up, Fibonacci retracement levels are referring to simple areas of support and resistance, and this is derived from the way nature works. The retracement levels are often used by traders to determine how much a move to one side will retrace once it stops. This way, they can have a better grasp on support and resistance levels, as well as probable entry and exit points. Check out part 2 of money making using Fibonacci retracements to see examples of how these levels work in real trading. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.